The ongoing US government shutdown means the official economic reports from the US will be delayed. But we do have some private sector data coming out this week, including the ISM manufacturing PMI due to be released shortly. We'll have the ISM services PMI later on in the week on Wednesday, when the ADP private sector payrolls report will also come out. The ADP will likely be the week's most important economic report, given that the Fed's focus has turned to employment and away from inflation. So that will carry more weight in midweek. And ahead of it, the dollar continues to remain on the front foot. But I think the upside could be limited owing to the government shutdown. And one of the currency pairs to watch is the euro dollar, which is approaching the 115 handle. So starting off with the euro dollar's monthly chart, you can see that in October, the currency pair fell by 1.67%, which is a small drop, relatively speaking. And overall, in the last several months, the euro dollar has remained stuck in a tight range between around 115 area to about 118. So it's been contained inside a relatively small range. The underlying trend, however, is bullish, as you can see by the rally that started at the start of this year, really, before that momentum ended at the end of June. And since then, it hasn't gone anywhere fast. So the key question is, does the bullish trend resume from here, or do we go even lower? Well, that's a key question that I've asked in the article that I've written on the euro dollar earlier today, the link of which can be found in the description of this video. But the long and short of it is that we think that the euro dollar is still headed higher from here. I think the downside is limited from around current levels, and I think 115 could be a good level to watch insofar as the support levels are concerned. Can we get there is the key question, and will we bounce from there? Well, the euro dollar is currently trading inside a bearish channel or a bull flag pattern, depending on how you see it. It's still making higher highs and higher lows on the longest time frames, and we haven't seen a clear lower low yet, which would invalidate the bullish technical bias on this currency pair. That being said, obviously we've seen smaller lower lows and lower highs, but in the grand scheme of things, the underlying trend still remains bullish, as indicated, for example, by the 200-day moving average, which is rising, and price is still holding above it. So this could well turn out to be a dip inside a long-term bull trend. The key area of support, as I mentioned, is around the 115 area, where we have previously seen significant price reactions around, most notably in July or early August, when rates bottomed out here before pushing to a new high for the year. That momentum obviously stalled in September, and since then rates have pulled back a little bit. So 115 area is very important given how price has reacted from around that area in the past. And if we were to go below it, then we could well see the euro dollar extend lower towards the August low of 113.91. And then below that, we have the 200-day moving average coming into play at 113.20 or so. Those are the key levels to watch on the downside. On the upside, what I would be watching for is a potential move back above the 115.80 level, which was the most recent support that gave way last week. So if we were to go back above that level this week, that would be a short-term bullish technical development. But longer term, I'd like the euro dollar to climb out of this bearish channel for me to turn bullish from a purely tactical point of view. Here's a weekly chart of gold, and the precious metal fell for the second consecutive week last week, but it ended just at above the 4,000 level, which is the most important support level to watch now. The weakness in the last couple of weeks has allowed the RSI to come off its significantly overbought levels on the weekly time frame. And if you go down to the daily, you can see that the RSI is no longer at overbought levels of 70 plus. At around 50, it's bang in the middle of the range, i.e. neutral. But if you look at the longer term charts, like the monthly time frame, the RSI is still significantly overbought. And on this time frame, last couple of weeks drop doesn't even show on the monthly candles. And so the long-term trend is still bullish. However, the 4,000 level needs to hold now to keep the bulls in charge. And if we were to go below this level decisively in the next couple of sessions, I think that would be a short-term bearish development as I move into the daily time frame. You can see here that the 4,000 level has been quite sticky in the last couple of days, with the precious metal going either side of the psychologically important level, but not making too much progress in either direction. Traders are still trying to figure out whether the trend is still bullish or have we seen the top. So obviously a couple of support levels have broken down in this drop, but the long-term support at around 4,000 largely holds as we saw on the weekly time frame. The key question is, can we now see gold establish a base around 4,000 level? And for me, that's the most important question, really. And in the next few days, if we see gold continue to trade around or above the 4,000 level, I think that would be a positive development. However, if the 4,000 level breaks and we start to trade below it for a few days, that would point to some weakness in the trend, and in which case we could well see a more significant correction towards 3,800, possibly 3,700, and eventually the bullish trend line, which comes in at around 3,600 level at the moment. So there are a few key levels to watch in the event of a breakdown, but for the time being, let's wait and see what gold does here, really, without trying to pre-commit in either direction. As things stand, the technical picture is still largely bullish on the higher time frame charts. On the lower time frames, the technical outlook does look a little bit muddy, to say the least, which means that trading gold from one level to the next makes the most sense at the moment. Don't forget to like and subscribe, and for more market updates, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.